Welcome back to the Spend Life Well show, where we talk about faith, finance, and aligning your wealth with your values. I'm your host, Certified Kingdom Advisor Mark Trice. And in the podcast studio today, we are going to talk about some things with the essentials of asset protection. Now, this is not completely in depth. We're just covering a few high-level topics today. But I thought it would be important to talk to you about these things. So what would happen if one unexpected event threatened everything you've spent years building and saving? You know, most people spend decades building their financial picture and wealth, and far fewer spend time actually trying to protect it. And so today we're going to talk about a few things that you need to consider with asset protection. And asset protection is about hiding money or avoiding responsibility. It's about creating safeguards around your wealth and your assets, and that safeguards against potential risk that could disrupt your financial future. So we'll talk about some practical matters here. So what is asset protection? Well, it's the process of reducing financial vulnerability before problems arise. Think of it this way. I know I love to go up into Rocky Mountain National Park and drive up this long road over the mountains to 11,000 feet. And in many cases, well, almost all the cases, there are no guardrails on the side of the mountain. So it can be particularly troubling for someone that, number one, is maybe afraid of heights or something. But it's always good to have guardrails around our financial picture. And asset protection is kind of like that. It's putting guardrails around things to keep you on the road and toward your goals. You hope you'll never need them, but you'll be glad when you do need them that they're there. So the key here is being proactive with these things. Growing wealth and protecting wealth are different disciplines, and a strong financial plan should address both. So let's jump in. Let's talk about some of the biggest risk to our personal wealth. Risk number one, lawsuits and liability. Now, depending on your profession, this may be higher or lower than for those of us that don't work in higher risk professions. But just simply even an auto accident, someone slipping and falling at your house, these are all liabilities. And people assume that, they only affect people like a doctor or a surgeon who might be operating on your brain, and they made a mistake, and therefore they're liable. No, this happens to everyone. So these are some of the things that you can, we're going to talk about the risk first, and we'll get into what you can do. What about business risk? Okay. What about contract disputes, employee issues? Maybe you have claims from customers or personal guarantees that you made. Many entrepreneurs discover their personal assets are more connected to their business risks than they realize. I know we're an entrepreneurial firm here, and so oftentimes, we have to do things and we have to guarantee it personally, and sometimes that doesn't work out all the time. So we have to be careful with that. Let's talk about risk number 3, market and tax risk, okay? Because asset protection is not only just about legal risk, you also have the market. For example, if you're a SpaceX entrepreneur or a SpaceX employee that you're just about to get very wealthy from SpaceX's IPO, you don't want to overly concentrate in that one SpaceX security. That's a risk. When you have lack of diversification and poor tax planning, taxes may be one of the largest long-term drags on your account performance and your wealth building. So make sure that you're not overly concentrated in things because you can diversify that risk by simply managing how those assets are allocated. Risk number 4, what about long-term care costs? A lot of people, especially when you're young, you don't think about these things. But almost all of us will go through some scenario in the future where we may be caring for aging loved ones. Right now I myself am in the sandwich generation. I have younger children or young adults in my family, and I also am caring for parents in different ways. Some of them are fine, but we're starting to see issues where we need to be able to provide for our aging parents, and we get put in the middle. Don't do that to your children. Make sure that you've addressed the issue of long-term care sometime in your 40s or 50s so that you are prepared for that and you don't put that burden on your family. So, but that is one of the most underestimated expenses in retirement. It's estimated that you may spend upwards of $90,000 in the last few years of your life, and that's today's dollars. You may spend that much money in the last few years of your life just simply caring for you, whether that's an assisted living or a skilled nursing care facility or home health care. And a lot of the families just underestimate that. And the sad thing is the risk is there, and we can do something about it. A lot of families, it's not the person that needs the care that ends up hurting, it's the surviving spouse that ends up hurting. So that's a big risk as well. So let's talk about a few things that we can use to help us mitigate some of these risks that we've talked about. So what tools can we use? Number one, we can use insurance. So insurance is the basic foundation for most long-term plans, and that includes your home insurance, your auto insurance, life insurance, disability insurance, business insurance for liability as well, and professional liability coverage. And one of the most easily overlooked simple tools that you can use to add additional protection to your financial picture is what we call an umbrella policy. This is something that we tack on top of our homeowners and auto, et cetera, and it provides additional coverage that goes beyond what the homeowners or the auto policy will offer. Oftentimes, it's just a few $100s a year for $1 million of additional coverage. Very easy to add. Just simply talk to your property and casualty agent and just ask them about that for a quote. Very easy to add. Asset protection tool number 2, trusts and estate planning. Trusts are not just for the ultra wealthy. We're finding a lot of examples where folks with lesser assets can use a trust very effectively. A trust is really more like keeping your family life going should you become incapacitated. A lot of people think it's so that we can hide assets from the public when I die. That's part of it, because if with a normal will, those assets will be published online, that you have a will, that you're dead, and get of the name of your spouse and everything else. But a trust can help you with planning and controls really while you're alive. Think of this example, and not to pick on Michael Dell, but Dell Computer. Michael Dell is the CEO and president. If he were to be injured or killed in a car wreck on the way home this afternoon, we hope he doesn't, although Austin traffic is really crazy. If he is killed in a car wreck, does Dell Computer shut down because he's dead? No. It's a corporation, and a trust kind of acts like a corporation for your personal affairs. So maybe you should consider it. Talk with an attorney. I will tell you, almost every estate planning attorney, the trust is their favorite tool to use, and you may or may not need one. You need to talk about the pros and cons of each, a will or a trust or both, okay? It can help you with privacy protection and things of that nature. So that's something to consider in your estate planning. Okay, let's talk about the third thing to do in your toolkit. Business entities. If you're a small business owner, the proper business structure makes all the difference. LLCs and corporations can help separate personal and business liability and provide additional legal protections when you structure it correctly. If you're a sole proprietor and you're out providing services and you cause a problem, you're going to have your assets attached if someone sues. Always talk to a qualified business attorney for those conversations. All right, the fourth one, retirement accounts and asset ownership. Many retirement accounts like 401ks may receive varying levels of creditor protection under federal or state law. How the assets are titled matters also. Ownership structure can influence both protection and estate planning outcomes. Make sure you are reviewing the registration of all your accounts with your financial advisor and making sure that they make sense. We review this with our clients every year just to make sure that nothing has changed in their situation where we may need to retitle some of those assets, but make sure that you're talking about that and understanding the implications of that. So here's some practical steps that you can take this very month to help you with that. Ask yourself, do I have enough liability coverage? And if I do, has my net worth outgrown my policy limits? So if you have a $3 million estate and you've only got $500,000 of liability coverage or umbrella policy, you may need some more, because believe me, attorneys will look at your house and the cars in your driveway and realize that you've got some cash. Number two, you want to make sure your beneficiaries are updated. Sometimes our family members fall out of favor. We may need to update those things. Maybe you've had a situation change where you've lost a spouse. We need to update those beneficiaries and review them every year. And number three, you want to make sure that you're reviewing your estate documents. Make sure your will, all your powers of attorney, that's both medical and financial, and other key documents are current and aligned with your goals. Believe me, in the state of Texas, the estate and probate law changes about once every 10 to 13 years. So if it's been 20 or 30 years since you last wrote your will, you need to get those things updated. And you want to be able to make sure that your family members can provide for you so that you become incapacitated. Number four, let's evaluate our business risk exposure. Business owners, you need to review those entities, structures, legal documents, and whether personal or business finances remain properly separated. I see this all the time. One of the worst things that you can do is commingle your business assets and your personal assets. And I know small business owners, some of us are guilty of it. That's something you can easily correct. Stop spending business money on personal expenses. That's a surefire way to have a good lawyer try to go after your personal assets if you have a liability issue with your business. And number five, it's you want to make sure that you're building a professional team around you. This stuff asset protection is rarely a do-it-yourself thing. You cannot do it that way. And having a coordinated team might include a financial advisor, your CPA or tax advisor, an estate planning attorney, and your insurance professional. All these people need to be working together. That's what we like to do, is have a review with those professionals every couple of years or so to make sure there's nothing we need to change in our client situation. So, from our perspective, asset protection is not rooted in fear. It's rooted in stewardship. And we're called to be good stewards of all our assets and wealth. And yes, we do have to do things to help protect, grow, and manage those assets. Protecting your wealth helps preserve those opportunities for the purposes you want to do most and the ones you value the most. So if you spent years building your financial foundation, we just want to make sure you're spending time protecting it all as well. Take time to review your insurance, your estate plan, business structures. Consider whether your current strategy still aligns with your goals. At Clear Vista Financial, we believe financial planning is about more than accumulating wealth. It's about stewardship, helping you align your values so you can provide for your family, enjoy life's blessings, and serve others well. As always, folks, you can shoot us an email at info@clearvistafinancial.com or shoot us a text at 254-282-0495. And until next time, folks, you've been listening to the Spend Life Wealth Show. Have a great week.
Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in the show should not be construed as recommendations or investment advice. Always consult with your investment professional before making important investment decisions.